Hello students, welcome again to this class of business studies. In our previous classes, we have dealt about the requirement of services that a business confronts when it deals in goods. We know that services are intangible, but they play a major role in enhancing the utility and satisfaction to a customer. We have also seen that services are indispensable, and to a greater extent, the overall satisfaction that a consumer derives depends upon the totality of the services. The success of business also depends on these services. As such, services are indispensable and important for a business. Therefore, each business, be it small or large, they rely on these services which aims at removing the various hindrances in the transference of good from the producer to the consumer and their actual consumption and utilization of the product by a consumer. So all these hindrances are removed by various kinds of services. In the same consequence, today we would be taking up our first services relating to banking. The first part of the service is banking. Now, if we define bank or what is banking, we know that a business require short-term fund as well as long-term finances. Many of the businesses, they are not in a position to raise or to collect sufficient or adequate fund that is required in their businesses. Depending upon the nature of the business and the market position of the business, they find it very difficult sometimes to garner and raise fund from the various sources. Therefore, an institution which provides a timely requirement of the funds, which supplies the timely requirement of the funds so that the business continue to carry out its operation smoothly. The life of the business does not comes to a halt. It does not hinders the operation of the business. And for that, it must be ensured that the business is having a steady supply of regular funds so that it can make use as and when the need arises. So in the process of sources of the fund, today we shall be dealing with banking. Bank, to be stated simply, a single word is there. It is an institution or it is an establishment. What is the work of this institution or an establishment? So the word is there, that it deals in money. Now dealing in money, it means there is an exchange of money, either accepting deposit or extending loan. So there, deals in money and credit. Credit is about supplying of money as a borrowing, as a loan to the needy person, to the needy businessman. And these exchange of money facilitate the business transaction or exchange in business. So this is a bank. We simply refer it as an institution who deals in money and credit supplies, facilitating the exchange of business. There is a very good definition of the Banking Regulation Act of 1949. It has included in its broad spectrum what are the activities which is included under the purview of banking activities and why they do so. So Banking Regulation Act of 1949 has defined as banking as a business of accepting for the purpose of lending or investment. So bank either accept deposit. So it is accepting for the purpose of lending. The purpose is highlighted in the first part, that why we accept deposit. We accept it for the purpose of either we lend it to borrow to the borrower, or the people who lends us, who gives us, from whom we accept, they give that money to us as an investment with the view of safe custody of their money or earning interest on their money. So here, for the purpose of lending or investment of the deposit of money from the public, this money that we have borrowed, that we have received as a deposit, that money business can use, the bank can use either as lending, or bank can keep it as an investment on the part of the customer of the bank, the client of the bank. And these money which these person, the savers, the customers of the bank have given to the bank, these money are either repayable whenever they demand, either through check or either in cash. So whenever they demand or they withdraw, either through check, there is draft. So all this, so the money which they have deposited, they are either repayable or they are withdrawable. The customer who have given us the money, they can withdraw it, or we can make some payment on their behalf. So the word is there, on their demand, repayable on their demand. Whenever they give us a command to repay the money, to pay for something on their behalf, we can pay them. Or if they want to withdraw for their own purposes, they can withdraw it from the bank. And how? Either through a demand draft, either through checks, or through withdrawal slips, receipt. So that is over here. So it encompasses the functions of the banking. What is the major functions of banking? Why bank operates? So that has given that bank is basically a facilitating agencies. We find the bank merely facilitate exchange, and this exchange in the business is facilitated by the adequate supply of money in the business world. We have seen that bank provide an opportunities for safe custody of the money where it is surplus. The people who have surplus money, their money can be put to a safe custody in the bank. They can treat it as it is in a safe custody, and this money which is in the safe custody, they can be there for the purpose of investment. The customer who have put the money with the bank allows certain interest on their money. There is a valid reason for it, because bank use their money for trading, that is repayment, or providing borrowings or loans to the needy businessmen, to the needy customers. Therefore, this service of banking ensures that there is adequate supply of money in the business world, so that business activities and business operation are not hampered. They do not suffer. They make sure that the supply of money or the circulation of money should be regularized it should be unhampered and it should be adequate. Paucity of funds sometimes affect the business activities. The business may perceive a very profitable venture, but owing to paucity of fund, business cannot take benefit of such situation, such opportunities. Bank ensure that whenever a need arises, there would be a supply of money by the bank. It would not let the business to struggle out of shortage or a scarcity of fund. So what we see, bank facilitate the transfer of fund from one place to another. Not only that, they also help in settlement of the loans and debts. So this is a broad spectrum of banking activities. We know that a bank is an institution which deals in money and credit. We have already written. And perceiving this, that since it is an institution which deals in money and credit, it means this institution can be a person, it can be a body corporate or otherwise. And this carries on a business of banking. It means exchange of money, either accepting deposit or providing credit. That is the purpose of banking business. Then it has been highlighted that bank plays a major role in the entire life of a business. They ensure that business should not suffer from the scarcity and paucity of fund. Bank act as a store, a safe custody for the surplus saving with the customer. Bank also provide that the money which it has received as a surplus in the form of saving from the customer, that money can be used in exchange to the needy businessman, to the needy business. And it thus helps in continuation of the business operation. A business does not suffer from paucity of fund. If we discuss about the various functions of a bank, the bank function can be categorized into two broad categories. First is primary function of bank, and the second is the secondary function of bank. Primary function of bank is about acceptance deposit. We have seen that the bank is an institution which accepts deposit. See the definition. For the purpose of lending or investment of the deposit. So the word is here. Accepting of the deposit for the purpose of lending or investment. Why bank receive that? It is clearly given. So the first primary function of business of bank is acceptance of the deposit. Bank accept a deposit from the customer. Now this deposit which a customer provides to the bank, they provides it only after meeting their requirement out of the total income, which is all often referred as savings. This saving plays a vital role in the business of the bank. It is this saving through which banking activities are set into motion. If there is no deposit, bank would suffer in its operation. So therefore, the primary function of the bank is acceptance of the deposit in the form of surplus saving by the customers of the bank. The savings of the bank can be deposited or into various type of deposit schemes by opening various types of accounts. The first account of accepting deposit is fixed deposit account. The characteristics of a fixed deposit account is that the amount which is deposited as a fixed deposit is repayable by the bank only after a specific period. It cannot be paid prior to the expiry of the specific period. The depositor cannot claim that they need the money and they need the interest as well prior to the specific period for which the amount has been fixed. And this period of fixed deposit, it may vary from 6 months to 5 years or more than that. It varies from 6 months to 5 years depending upon the type of the investor, the type of the customer. Generally what happens, usually when the amount is very large, it is deposited for a fixed period, for a longer period, not for a shorter period. Long amount or huge amount, large amount is deposited for a fixed period, longer period. And bank provide a higher interest for higher deposit and for greater length of the period. So if a customer deposit a huge amount, a large amount for a long period, then bank pays a great interest. The basic feature of deposit, fixed deposit, is that the money cannot be withdrawn before the expiry of the fixed period for which the amount has been deposited in the bank. But what happens when a customer needs some money in between, before the due date? So the customer can borrow the money from the bank against the deposit. And when the deposit matures, the bank can deduct the borrowings that it has extended as a loan to the customer. As regarding saving deposit, the aim of saving deposit by a customer is to earn on their investment, on their savings. And how they can do it? They can mobilize their saving from a useless state to a profitable state. The amount which they hold with themselves, it do not assure them of any return. But when they mobilize their savings from their control or from their possession to the possession of the bank, they are assured that bank would provide them some interest, for bank is going to use their money in trading, that is borrowing, giving in borrowings, providing loans. Any person who wanted to open or who wanted to keep his money as a part of saving, he can open a saving deposit account, he can deposit the money, and he can leave it to the bank. Generally what happens, in a saving account, a customer can withdraw the money from his account as and when the need comes. There is no time limit. That amount has to be kept in the account for a specific period. It is not fixed. Similarly, the amount is also not fixed. One can keep on depositing as and when he has money in his possession. He can withdraw, he can put addition to his saving with the bank. So there is no restriction on what should be the limit of the money. As and when a customer has money, he can deposit it. Similarly, he can withdraw it as and when he requires the money. In a saving bank, generally, money can be withdrawn through check facility. A facility of check is given for withdrawal of money. A passbook is issued to the depositor, which contains a detail about the amount deposited with the bank and the amount a customer has withdrawn from the bank. All the checks are deposited and withdrawn by the depositor. All such transactions are recorded into that passbook, which is provided by the bank. So saving bank is a bank, or rather it is an account which promote the habit of saving in Indian customers. It also encourages them to mobilize the saving from an idle state to a profitable state. So the savings can be mobilized to the bank as a safe deposit, as an investment, and then bank provide an interest on those saving. But it must be remembered, nowadays what we find, that bank has placed a restriction in the amount, maximum amount that you can withdraw in a day, as well as the number of transactions that one can have with the bank in terms of drawings. There is a limitation and restriction. So the withdrawal is subject to the restriction that is placed by the bank. Next we have recurring deposit account. The name indicates recurring deposit means depositing continuously or cumulatively every month, every year. This is to encourage a thrift, a saving among the people. A depositor can deposit a fixed amount every month. Let us say we have this scheme in post office. We have this scheme in banks as well. It encourages the small savers, small businessmen also, to adopt a habit of saving the money. They can start as small as with 100 rupees each day. That is possible. So in a recurring deposit, the depositor can deposit a fixed amount every month cumulatively for a fixed period. In the recurring deposit, the depositing of a fixed amount takes place for a fixed period, and the amount so deposited at the end of the fixed period is repayable to the customer with interest, along with an interest to the customer. There is no withdrawing on this recurring deposit account. Money cannot be withdrawn from the recurring deposit account. But yes, we have discussed, as and when the need arises, a customer can borrow, a customer can take loan from the bank. A passbook containing the deposit is issued to the depositor. Every month when a customer deposited, it is indicated, it is pointed out, it is written in the passbook. And finally, when the account matures, the bank pays the total amount along with certain interest to the customer. So this is merely with the habit of with the aim of promoting the habit of thrift saving in a small customer. in a small investors whose income is not very high. So bank not only caters to the need of rich and wealthy people or wealthy businessmen, it also takes into account the needs and requirement of marginal and small businessmen and customers. Finally, we have current deposit. In a current deposit account, there is generally a facility that a businessman who has a current account with a bank, he can withdraw the money as and when he requires a number of times. This facility is provided in a current account. Beside this, there is one more facility that is attached to a current account, and the facility is overdrawing facility. There is a certain limit which is agreed by the customer and the bank, a limit to which a customer can withdraw money even when his account does not have any money, any deposit with the bank. So current account promotes deposit into the bank as many times and withdrawal from the bank as many times. It does not place any restriction. As and when desired, you deposit it. As and when you desire, you take out. There is no limitation in the number of withdrawal and number of deposit in a current account. Besides, current account also provides the overdrawing facility to the customer. But yes, it has one demerit. Bank does not allow any interest to the current account holder, because bank has given them that now you deposited the money and within 2 hours, if the need arises, you can take your money. Bank will not be able to use the money for its business, or there are very lesser chances that bank would be able to make use of the money, and therefore bank do not provide any interest on current account. Rather, if certain incidental charges are made, bank realizes those charges from the account holders for maintenance of the account, for providing various withdrawal facilities and all. So this is about acceptance of deposit. Then the second function of bank is lending money. Bank provide money. There are various ways how a bank provide his customer the facility of withdrawal of money. It can be in the form of an overdraft. Now, overdraft refers to the advantages of drawing in excess of what a customer has in deposit with the bank. A customer can withdraw greater amount than what he has deposited into the bank, provided he has such agreement with the bank. There is no overdraft facility in saving account. It is only provided in current account. So there is an overdraft facility. A businessman can withdraw number of times, and as and when he requires, he needs. So that is an overdraft facility. But yes, bank charges certain interest on this overdraft. That is the income for a business, income for a bank. Then another account or method by which bank can promote the withdrawal of money is cash credit. Bank provide cash credit. That is, it is an arrangement It is an arrangement through which bank advances money in cash or in the form of loan up to a specific limit to the customer, to the required customer or to the needy customer. But when he provides some cash credit, at times he may ask for that you may give some security. When some cash credit is given, maybe bank may ask you give some either current assets or some other asset as a security, so that the bank can be sure that if the business is in a position not to return or repay the money, the bank can realize the money that it has advanced. Then there is loans and advances. Now, loans and advances is a lump sum money. A lump sum money which is paid to the business to be used. But this money that is paid as in a lump sum, that is repayable after the expiry of a specific period. It may be secured against some assets or it may be unsecured. The customer may not pledge or pawn any assets as a security, and as such it can be secured, it can be unsecured. Generally, loans and advances are granted against a security of some assets. Interest is charged on the whole amount. It does not matter if some EMI is paid on the loans and advances. The interest has to be levied cumulatively on the outstanding balances. Then another advantage is discounting of bill. Bank provide a facility of discounting of the bill. Bank accept a bill before its due date of maturity. It takes the risk when a businessman approaches to the bank that he has an immediate requirement of cash. He just hand over a bill which he has received from one of his debtors to the bank and ask the bank to deduct some amount and then pay the amount which is mentioned in the bills of exchange, which is a negotiable instrument. So bank discount the bill. So the primary function of bank is accepting deposit and lending money. Then bank also act as an agency function. These are the secondary function of the bank. It means bank act as an agent of a customer. As an agent, he perform a myriad functions, a various type of functions. Bank collect our bills of exchange on the due date. When we send a bill for collection to the bank, bank collect a bill, promissory note or check on our behalf. We received a check from somebody we deposited in the bank. Bank sends the bank or set into action the bank for realization, for collection from the debtor's account and the debtor's bank. So bank act as an agent on our behalf. Bank also collect certain interest and dividends on our investment that we have made in some company. Bank can also act as a underwriter. It can buy and sell share on our behalf, share, debenture or other types of securities. Bank can do that on our behalf. Then bank can also respect our standing order. The order that we have given or we have authorized the bank to deduct a specific amount every month or on a regular basis to pay for a fixed liability on our behalf, like payment of insurance premium, payment of electricity bill, payment of house rent, payment of rent or other thing. So bank makes a regular payment on our behalf. Bank also transfer funds. There is EFT, electronic fund transfer or NEFT. from one branch to another branch in any part of India, any part of the country. We can transfer it. Bank also act as an executor on our behalf. It also act as a trustee. If anything happens to us, bank takes care of our savings, and it authorizes only our legal hire to come in our place. So these are the agency function of the bank, which a bank perform on our behalf. Then there are various other facilities, allied facilities, which increases our utility of dealing with the bank, like facilities for the locker, giving preferences to a customer having a goodwill in the market. We can keep in the locker our jewelry, our important document. They are in the safe custody of the bank. Bank also provide various trading information like the value of currencies, the valuation, the increase or decrease in the value of currencies each day, the exchange rate. Besides these services, in case of an export and import, bank also issues a letter of credit to the exporter or to a foreign trader or a trader who deals in some another country. And I have said, bank act as an underwriter. It underwrites shares and debentures and other types of security. So these are the allied services or general utility services that a banking institution undertake. So this is all about banking business, and the reason why bank engage in a business. Till then, happy learning. We shall meet in the next class.